So I think that's been a big part of how he's created value, right? And that's basically the original Liberty Media, right? Is all the content, all the programming, right, outside of the sort of pipes and the scale game of just the pure cable business, right? There's the content business. So he's been involved for a very long time with JVs and partial ownerships and increasing those ownerships. You know, it's a very cheap way for him to participate earlier in the development of many, right, very sort of what today are sort of name brand content channels, right, and channels. So, you know, I think one of the more recent cases that's worth mentioning in a little bit more detail is the JV that they have at QVC in China, right? So there's like 270 million homes, but 64 of those are in China, right? Through a JV, but that's not consolidated, right? So that's a big chunk of their business, right? But in typical sort of opaque GAAP financial ways, it's not brought to the surface. And that's actually quite similar to the 1991 spin-off in that, or split-off, excuse me, of the original Liberty Media, in that all those valuable stakes, a lot of them through JVs, and marked at cost, right? Held at cost. It looked terrible from a GAAP perspective. You really could, and it would look like it was losing money, right? And so why would anybody, when they do a quick check, want to invest in, the original Liberty Media, right? With all these JVs and everything that looks opaque. But the truth of the matter is that once you look past that and actually get a better sense of what's underlying, what businesses are there, there's a lot of value. So that, I would say, is just another part of the right ways that he actually approaches sort of not disclosing fully value, but then having it there and then unlocking it.